Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Now, domestically, not a huge amount happening. The RBA does meet later today.
Yes.
Obviously, interest rates won't go anywhere.
Well, you wouldn't expect them to.
No. So I suspect it's just going to be around the commentary of what the governor says.
Exactly.
And how they're going to play things in the next few months. So we'll leave that for the time being. But Japan, there's a lot of activity today.
Oh yeah, that's the big one.
The CPI has gone up slightly again, which is not necessarily a bad thing because it's quite low anyway.
That's right.
But moving on from that, obviously the BOJ meets later this afternoon.
Yeah, from negative 0.1% to possibly break even.
Huge move.
Huge move. Yeah, but
10 basis points.
Yes, but I mean, when you're looking at what their stock market's done, that was up 2.5% yesterday. It was showtime on the Nikkei 225, and it's pretty hard. You just scratch your head in disbelief. The Nikkei has just rocketed. You know, it's been I think the star performer really over the last year. I know the Nasdaq's been extraordinary, but even the Nikkei has just been.
Yeah, there is a lot of disconnect in the markets at the moment.
Yes.
As in, you would sort of think certain things should be a certain way when in actual fact you're getting two sets of data which are on the opposite spectrum.
That's right.
And it's just not normal.
No, it's not. The correlations. I'd love to see it laid over on graphs and just, you compare different markets and long historical views. And
yeah, it's very different. But we'll keep an eye on that announcement later today. But once again, there's a lot of speculation that the BOJ will do something.
Yep.
How that will affect the yen, probably not a great deal because it's not a huge move anyway.
No, that's right. You might see a little bit of strength. That US dollar's had a little bit of a nice run up. So possibly you see that maybe the yen could have a little bit of movement. I wouldn't be surprised, but I don't think it's going to be dramatic.
Yeah. Just with some of these currencies as well, of the three, you would sort of say resource type currencies, particularly Canada and Australia. The Canadian dollar's been performing the best.
Yes.
They've got their CPI numbers out. Once again, that's sitting around that 3% mark.
Yeah, very sticky.
It is. A lot of these economies, that seems to be a floor at the moment, that 3% mark.
Yeah, very much so.
And
how they're going to go as far as any form of rate cut is very much pushed out. And pushed out even further with oil at nearly $88 a barrel.
Yeah, it certainly is. US inflation came out last week, was slightly higher than what the market expected.
Yeah.
There was a bit of a sell-off, but once again, it's sort of...
It bounced.
It's taken it in its stride once again. The Fed, interest rates...
Unemployment.
Yeah. So it's once again, that's where you're getting these...
dislocations.
These different sets of data where the employment market or the labour market is still very strong, interest rates are sticky, and it's like the market is now used to a 5.5% interest rate.
That's right. We're going to cover that in a second, and we just you showed me the 2 and the 10 year, so we'll come to that very shortly. But I'd love your commentary on that.
Yeah. So and here we have it. So from the start of the year, both the 2s and the 10s are up about 40 basis points. So that's a big rise in interest rates.
Yeah, nearly 10%. It's monstrous.
Yeah, and you sort of, the markets at the moment, as I said, they're looking at this. It fluctuates a lot, obviously, but it's now got to the stage where the market is sort of used to these higher interest rates.
That's right.
Which is probably not such a bad thing for the Fed.
Yes.
Because that gives them the chance to keep it there if they want to.
Which I think they do.
For an extended period of time.
Yeah, and is June going to be blast off? I mean, we can't believe it was, everyone was saying you're going to have your first rate cut in March. Then it was going to be April, then they pushed it back. Now they're saying June, then it's 3 cuts for this year. Now they're saying it's probably going to be 2. And with interest rates and with energy prices up and the stickiness, are we actually going to see a rate cut?
Yeah.
It's going to be just incredible when you look back in, at the end of the year and say, wow, nothing materialised, or you're 50 basis points lower.
Yeah, and also bear in mind the election later in the year where
an
interest rate rise or cut, most likely a cut, would be seen as political, either side of the election, depending on the result.
But if you've got oil back at $95 or $100 a barrel, which many analysts are now saying the possibility over the Northern Hemisphere summer, and you're at 87 now, then there's no way you're going to see a rate cut.
No.
Because even if the inflation factor.
Yeah, I know. And
what would happen if you saw a rate rise in July or August?
Well, it's a different scenario altogether, isn't it?
Yeah.
Because no one's expecting it.
No.
So, and looking at the oil, once again, the oil, that's up about sort of between 10 and 15% since the start of the year as well.
Yeah.
So that's creeping back up there. So
It's been very bullish.
So it looks cheap on this chart because it's a 2-year chart.
That's right.
There's a definite trend from like even about November last year.
Yeah.
Just creeping up slowly but surely. But once again, that's not.
Well, that was the war premium in October due to Hamas and Israel, and then all of that war premium washed out by the middle of December, and then it bounced again come really, I suppose, the end of New Year's Eve sort of time frame.
Yeah. But these prices, it's definitely not what the central banks would want to see.
No.
Going up significantly, because that can certainly.
OPEC does.
Well, OPEC would love it, but the central bank's not.
Mr. Putin would be very happy.
Yeah, well, he's very happy anyway, isn't he?
Yeah, 88% or 90%.
Big election win. So it's well done. But yeah, it's plenty going on. So we'll keep an eye on the BOJ later today.
Yep.
And the other data coming out throughout the week, and catch up again next week.
I look forward to it. It's going to be a great week. 5 central banks meeting, and you just don't discount that. You can't say, well, look, there's not much happening in the sense of they're big themes. So we'll just take that on board, and volatility is going to be very, I think a wild and woolly week for commodities and currencies.
Certainly will be. All right, we'll catch up next week.
See ya.
Thanks, mate.
Bye, Andrew.
And that's the XM.com weekly market update.